Good evening, monsters. This is Fahad. Today is March 16th, quite late at night. It's 10:53 p.m. Many of you are probably already sleeping, especially on the East Coast. Many are probably not on the West Coast. I wanted to do this one tonight instead of one in the morning, just because this one is going to be a little bit longer video than usual because I got plenty of things on my watch list here. This is usually the time late at night when I quietly slip into my office and spend some time just researching and looking at a few things after my daughter has gone to sleep. So here's a few things on my radar. First, I want to answer one of the questions that was raised in the chat room today. One of my clients was asking to cover IYT, the transportation index, in my next video. So let's take a look at this one first. Now we know the FedEx reported really good earnings after hours tonight. We covered that before the closing, before we close the chat room. Fantastic beat on top and bottom line, and the forward guidance was also slightly raised. So that stock was just ripping higher. I think it was up like 6 or 7%. So let's take a quick look. There you go. After hours, yeah. I mean, this thing was closed at 144 and it was ripping higher after hours quite a bit. So this is gonna actually move IYT higher tomorrow. It's a big component of IYT, and so there is no. It was already IYT was already pushing higher towards 140 after closing at 138.75. So here's the daily chart, and it's gonna push it higher. That means it's gonna break out through this bull flag consolidation right here in this tight range. So we're looking at a breakout through this, but there's going to be a 200-day coming up around 140.87. Let's see how it reacts over there. But to me, the most important level is all the way up here. Once again, going back to my favorite technical study, here's your volume over price resistance. Basically what I call congestion area. So this is around 143.9. I would expect IYT is probably this thing is gonna act like a magnet, and we're gonna see transportation index gradually rise and retest this level right around 143.9, 144 level. And at that point, we'll see how it reacts. You know, FedEx has set a pretty good stage for UPS to possibly also beat and raise, or at minimum perform at the same level. And then another big component of IYT are basically airlines, which haven't really been performing, but some of the metrics such as the Southwest Airlines recent traffic and the other things that have come out were relatively stable. So there is a good chance we could see further push higher in transportation index all the way towards 144, and then we'll see how it reacts over there. Okay, now let's go to some individual stocks that I want to look at. The first one is Nike. There you go. That's Nike. Nike will be reporting earnings next week. It's going to be on March 22nd, which is, let's see, that's a Tuesday, and the earnings are going to be on after market closed. So we have time the rest of this week and Monday and even Tuesday to basically assess the potential trade idea on this. But I want to show you what I'm looking at. See this right here? When it reported earnings last time, the stock has started to break out sharply, but it ended up just having smacked down hard with a major reversal pattern, you know, leaving this giant cloud behind it, which was it just didn't have the firepower. That was a failed breakout that turned into an ugly red candle that day, and the stock just went south. Part of this had to do was just the bad timing of where the market was at the time. I mean, remember that December 16th was the time when the Federal Reserve raised the interest rates, and then we kind of like just flatlined for a week or two after they raised the interest rates, and then the whole market after that basically just went nuts and then continued to sell off until January. So part of this had to do just with the sentiment with the rest of the market. And I think, but the most important thing that we may or may not have talked about, I can't remember exactly, but earnings were great. I mean, they beat the top and bottom line. Chinese numbers were very, very strong. There was everything to like in that earnings report, but they had some market share loss, and people freaked out over this, that Nike is probably not going to be able to sustain the market share from here, and they were losing to Under Armour and others. And that was just good enough reason for everybody to just say, you know what, it's time to take some profits, and the sell-off began. Now, that very sentiment may be turning for the better, and I think there's a chance the company, when it announces earnings next week, it's going to break out through this, and it's going to probably pop right back up towards 66 plus, maybe all the way to new 52-week high. Let me show you why. Here is right here. This is the Susquehanna research that came in my inbox today, as you can see, March 16. Now keep in mind, I get 60, 70, maybe sometimes 100 files of top Wall Street research in my inbox every single day. I'm not looking for price to earnings multiples or just raw data that you can find for free on Yahoo, Google, finance websites. My objective when I'm doing fundamental research is always to look for items that are outside of the box thinking with high probability of playing out, because when there are discussions related to items that is not baked into consensus, that's when you actually see a significant disconnect between the current sentiment or the current stock price versus what the actual numbers will look like when the earnings come out. And that's how you can basically use fundamental analysis to your advantage. Here is Susquehanna research. It's a third quarter earnings preview for Nike that came out today. As I read this report, the line that stands out for me is right here. Nike's market share has improved following an earlier note where we highlighted some of the recent softness. And it goes on to say Nike market share has improved running casual diamond, 150 basis point of share gains in the last 4 weeks, ending March 5th, versus 140 basis point decline for the period ending February 20th for SportsScan. So, right here, going to the table, this is what they're talking about. They see Nike total brand market share for the last 4 weeks gaining 114 basis points. Going back to my chart, guess what happened here? People freaked out because Nike actually saw a little deterioration in the market share. They lost market share. Here is Susquehanna research telling us that their channel checks suggest that they actually this time saw 115 basis points increase in market share before earnings are coming out in the last 4 weeks. Now, what's most important thing in this report, where did it go? Right here. The most important thing in this report is this data is coming out from Scan Info. This is a third-party source that combines that looks at a lot of sports analytics or something. Why is this important? Do you guys remember when we were really bearish on Monster Beverage before it reported back over here in January? And we were seeing significant amount of put buying in Monster Beverage, and I was making the case that when it breaks down through a trend line right here, this thing is going to come straight south, is going to go south. A lot of you capitalized on that, and that's exactly what happened. After it broke through this volume over price support over here, the stock went straight south, and many of you cashed out with big profits. What led us into that trade in Monster Beverage was also SportsScan data, which was showing market share loss for in the energy drinks category. Here's the same company, SportsScan, this time making a case that they see Nike actually gaining market share in the last 4 weeks, and that's bullish. And Susquehanna is using that to basically come up with a bull case going into earnings report. Now, one thing, this actually goes perfectly with what I saw in the option market today. I didn't get a chance to discuss this. See this volume, 8,200 contracts right here in the March. These are next week's March 24 weekly 62.5 strike calls. There was about 6,000 of this was rolled out from March this month to next week at the same line at 62.5 strike calls. You would have no other reason to roll these calls into this strike unless you were strictly betting on an upside with earnings coming out on Tuesday next week. So that's what this bull is positioned for. When they rolled, they paid $1.36. They paid $1.36 for those 6,000 contracts, but they bought them today. The next week's 62.5 strike call. So there's your play right there. Now keep in mind, as always, as I say, if you're going to make an earnings play, just make sure you are using lunch money. What is lunch money? It's $100 or $1,000 or $10,000. You decide what that is. All right, so don't go over the board. But this is exactly the play. The traders are buying next week 62.5 strike calls, looking for stock to break out next week when it reports earnings. Here's the chart again. Now, quickly, we have actually a technically we have a head and shoulders, inverse head and shoulders um, pattern over here as well. So let me just draw these real quick so I can show you. So here's your neckline, and here is your shoulder, here is your head, and here is your shoulder, right? So you have inverse head and shoulder pattern with neckline around $63. So that bull in the option market is betting on breakout through this neckline and possible run back up to new 52-week high. So that's your play right there. That's Nike. We have bullish view from Susquehanna, and that's what I'm looking. We got option activity that is bullish. We got a chart that's possibly setting up for breakout, and we got good fundamentals that tells us that is telling us or hinting us that that it's going to be a pretty good solid report. By the way, in the same report, they're also saying that 26% increase in China. In the orders, and that's just huge. That's giant. I mean, so that's another piece of puzzle in the same report. I'll post this report in the chat room tomorrow, so you can take a look at the whole thing. But a lot of great content over here. Next one on my list is MedTech. Now it's funny because when I started doing these videos, I was talking about how this week has been pretty unusually strong for MedTech stocks. We were talked about Intuitive Surgical. We talked about a little bit about Stryker. We talked about Nevro, which actually didn't do quite well today. The stock actually really sold off, but that's because they are trying to basically pocket this in the same category as a lot of specialty pharmaceutical stocks such as Valiant and Endopharma and Mallinckrodt and some of the other ones. So, which is completely wrong distinction. But either way, Nevro did not perform well today, but everything else in the medtech space actually held very well. Interestingly, while I'm talking about this for the last 2 to 3 days, and here I take a look at my inbox, and what I find is right here from RBC Capital, which I was not even aware of, came in actually late last night. There is actually a conference going on right now in the medtech space. It's a 2016 SAGES conference. It's actually started today, March 16. It's going to continue until March 19. A lot of things discussed over here, and it feels like when I read this note, it is mostly around the robotic surgery, and the focus is on the future and the growth of it, which means Intuitive Surgical is integrated part of this discussion. As I scroll down to this is what the most important section is. A lot of sponsored events, including the analyst meeting or investors meetings, are scheduled at this conference that starts tomorrow, March 17, March 18. The next 2 days, that means Thursday, tomorrow, and Friday. And here's the schedule. You got Johnson & Johnson in the morning, then you got Stryker, Medtronic. Here is ISRG, presenting around 4 o'clock tomorrow, 4 to 4:30. And you got a whole bunch of other companies. Here's that little tiny one, TRXE, which is up and coming in the robotic surgery as well. It's a very tiny a medtech stock as well. So keep an eye on this entire sector tomorrow. Is my point. We're bullish on a lot of these names. We already own call options in Medtronic and Intuitive Surgical, but keep an eye on this entire space tomorrow. The conference started on March 16, but the actual presentations from these companies is scheduled over next 2 days, Thursday and Friday, and we're going to see probably some of these guys say something that's just going to spark a rally potentially in the entire space. So that's one thing. Another thing that I'm watching, and I just hope Intuitive Surgical does not actually blow through the 600 strike, because I'm holding April, March 600 call calendar spread, and I really want to see the short leg expire work less. That's the objective here. So I just don't want it to open and just shoot higher. It can probably just pause there for next 2 days. Just give me a shot, and then boom, it can rip higher. I don't care. But not in the next 2 days. So that's just my thinking. So that's the medtech space. The next one I want to look at is is Sarepta. Now, sorry, SRPT right here. Now, I don't. Many of you guys know what the history is over here. I've written extensively about this in the past. This is the company that is basically trying to compete directly with BioMarin, BMRN. Both of them are trying to make the first drug to address DMD franchise, which is very fatal and very important, with no drugs, with nothing on the market. And see what happened right here. Basically, the short story is right here on January 8th, and I think that's probably where we should have been alarmed about this. But right here on January 8th, Sarepta basically announced a 4-year new plan with some new data about their drug called epilepsin, something like that. Trying to figure out exactly what that name is, but epilepsin, something like that. But this is where they actually changed the 4-year outlook and the design of their trial just before the AdCom was about to focus on recommendation for the FDA approval. Stock started selling off. I wish I had been, keen enough or strong enough on exactly what was happening between January 8th and January 14th. I did not catch that, and boom. Basically, the FDA, the AdCom came out with a very, very negative opinion on the drug, and the whole thing just collapsed. It's funny because there was like at least 9 or 10 analysts with hugely bullish articles and very extremely positive outlook on this stock before going into that AdCom meeting on January 14. Everybody got it wrong. Everybody got it wrong. There was a lot of call activity in this too, and everybody just got it wrong. Stock collapsed, went straight down, basically cut more than in half. And then in the last 2 months, it has done nothing. It has been just stable right here. However, something unusual happened tonight after the market closed, which caught my attention. So here, while the stock is now in the dumpster, on trading right here on 1455. This is what we found out from the right here. See this? March 16, that's today, 8 o'clock, 8 o'clock. They all came out after hours. Here is, let's look at this one, Barry Richard, who's a director. It was making rounds on Twitter. 75,000 shares bought today for 1565. Common stock. Actually, it was the transaction date was March 14, but it was posted on the SEC website today. That's $1.17 million insider purchase. Next one. Kathleen Barron's, right here, 65,000 shares bought. Also, transaction date was around March 14. Another 10,000 bought today for 1454. That's another over 1 million share purchase, insider purchase. And the last one right here, Jill Ban, 4,500 shares bought, also around March 14. These are some heavy insider buying at a time when nobody wants to look at that stock anymore, and everybody has given up. How much they have given up? Let me show you exactly what RBC Capital, for example, had to say about this just late February. Here is RBC. This is one of the analysts, that was extremely bullish on this stock. And after the AdCom meeting in January, after the stock collapsed, they basically gave up and moved to sidelines. Now this analyst has turned so negative that they believe that when the FDA is going to announce the PDUFA, the actual approval for this drug is now scheduled for May 26th. So write this date down. May 26th is when the FDA is going to decide whether they're going to approve this drug or not. This analyst, which has now completely gone from very bullish to very negative, now see a CRL, basically a complete response letter, when on May 26th, and they believe the Sarepta will basically be sent back to drawing boards and will be told, that you need to complete your new trial data, which is called Promo V, and come back to us in 2018 before you have any chance of basically bringing your drug to the market. So this guy has basically, right here, it tells you that PDUFA is pushed out to May 26, just to keep that date in your mind. But this analyst has completely gone the other way, and is basically telling everybody, they're going to get a complete response letter, and the company will be told, don't come back to us until 2018 after you have PromoV data complete. Well, I can tell you this. If I go here, and I go here, and I basically look at the straddle right here, and I go to May or June, you can look at either of them. The stock is trading as 1455, and if I just round it up to go to 15, here's a 15 strike. Let's take the midpoint of the bid and ask. Let's say about $12. The straddles for June, which will cover the May 26th PDUFA, is going for $12 with the stock at 1455. I mean, this is the option market is expecting either this thing is going to crash to like $2 or $3, or it's going to just do a moonshot, or it's going to just sky high. Now, this is very, very binary event, and everybody has turned bearish on this. But it gets my attention when I see these really aggressive, very large insider buying that suddenly is coming out today. And I mentioned you can just go to streetinsider.com and just type in the symbol, and you can see yourself. 3 big insider buying was posted today after the market closed. Either these insiders know something that we don't, and no analyst is looking at it so far, or these insiders have gone out of their mind. But I don't know if any management that puts $2 to $3 million in line ahead of a critical catalyst like this. And so something to keep in mind. I'm going to keep an eye on the option activity on this going forward to see anything big is coming out from this company. See how traders are positioning in the option market. Maybe it can give us some color. But at this particular point, it's just. But by the way, there was one call option activity in this. See this 3,000 open interest. Before I started this video, I actually looked up behind this. These 3,000 contracts were bought for $4.60. On March 9th. So last week they bought 3,000 of these contracts for $4.60. So there was a little bit of bullish activity in this recently, and now we have large insider buying. Either way, something to keep in mind. Nobody likes this stock anymore. Everybody has given up. Everybody believes they're going to get a complete response letter, and yet here you have directors in the company buying a whole chunk of the stock. So we'll find out exactly where that takes us from here. Another one I want to talk about is Noble. This is the offshore driller. There was in the chat room today, I mentioned that there was a massive, well, not quite massive, but there was a pretty good size put roll from March to right here to April. So it was just 1 month out. They were rolling these puts out to from March to April. Let me give you exactly what they were doing here. Come on. Sometimes it takes just a long time to load. Here you go. So here is Noble right here. See this? So they closed the April 11 puts, and they bought March. They closed the March 12 puts, and they bought April 11 puts. This was yesterday, and there was another one that was today as well. So I'm going to have to dig it up into this list. But basically, there were 2 put rolls yesterday and today in Noble, both going from March to April. So basically, these bears are not giving up. They're looking for further downside in the stock. So here, the open interest, see this open interest in April 11 puts. So 5,000 of that was rolled on Tuesday, and then another 4,000 of that was rolled on Wednesday. So here you go. There's 9,000 right there. So the stock ran into short with high short covering. They went straight up, failed, and now just consolidating right over here. I have an interesting piece that's going to tell you something that's probably very hard to pick from by many. Here is a research note that I got in my inbox from Citigroup today. This came in today, and it catches my attention. Something in here that's gonna probably not many are anticipating. Noble decided and along with ENSCO, ESV, and Noble, both of these offshore drillers decided in recently that they're going to basically start buying back some of their outstanding debt in order to reduce the interest payment. Why are they doing so? Well, ENSCO first of all went out and bought $750 million right here of their outstanding debt. They did it this week. And Noble went out and bought about $200 million of their outstanding debt in order to reduce the interest expense. Now, there's some calculations behind it, but Citigroup believes that it's going to save essentially the company about $16.5 million per year in interest payments going forward. So what it does, essentially, it does two things. One, it basically improves the quality of the balance sheet a little bit. So you have lower debt and you have lower associated interest payments with that. So it basically improves the balance sheet, but at the same time it reduces the liquidity as well. I mean, if these guys are basically running negative free cash flow, so you would think they will basically preserve every dime of cash they have in their checking account, you know. But no, in this case, they're using that cash, whatever they have available, to basically buy back their debt. Why is that important? Why am I so picky about them buying their debt, and what does that have to do with this put buying? Good question. Here's why it's important right here. See, this is how I pick out. This is a great example right here of how I pick out pieces of items in my fundamental analysis that could give us a color that's not fully priced into the stock. That's what fundamental research takes. It's not about looking at PE ratios or other kind of financial ratios, because anybody can find that on Yahoo or Google Finance. Right here, Citigroup is telling us in order to fund these purchases, Noble will have to eliminate its dividend completely, probably completely. How much dividend Noble pays? Well, right here, if you go to the chart, you can see it paid 15 cents here, 15 cents here, 15 cents here. What is the dividend yield that the company has? Let's see, which one is it? I'm going to have to dig through. Okay, I'm going to have to find so many windows open here. But I looked up earlier, the dividend yield on this stock is 5.6%. That's what I was looking at earlier. 5.6% dividend yield. The only way they can buy back their outstanding debt is by completely eliminating the dividend. And it shouldn't surprise you, because a lot of other offshore drillers have actually already done that. I'm not sure how investors are going to take it. If they eliminate the dividend completely and you still have negative free cash flows, yes, the balance sheet might have improved a little bit. There's a slight chance they're going to pay the next dividend probably around late April, because they always tend to pay these by the time they're reporting earnings. So sometime between here and here, so in the next month and a half, do not be surprised if you see an announcement from Noble telling you they're completely eliminating their dividend. Either eliminating or cutting it down to like 1 cent, because that's where they're going to use the cash to buy their debt. And I think the reaction, in my opinion, when that happens, is going to be down. And that's what this guy is betting on. These bears are rolling puts out to April. They're looking for further downside. They want to see this go down. They want to see this go below $11 strike. The stock's trading at $11.27 right now. These strikes carry pretty good delta of 0.42, so they're actually not expensive. The 11 strike is right here. So this is pretty, basically right at the money. And they want to see this thing go right back to new 52 low. I mean, keep in mind, this thing was trading as low as $6. This is the even number right here, $6.66 before. So don't be surprised if it goes right back to that. Another thing I will tell you is that, just theoretically or thematically thinking about this, when a company like Noble is buying back its maturities that are not expiring until 2021 in order to reduce the interest payment, so they can preserve, so they can basically improve the balance sheet, that's a deleveraging. That's in pure technically speaking, they are deleveraging. They're not leveraging, they're deleveraging the balance sheet. And what that means, just thematically thinking about this, and ENSCO is doing the same thing, ESV is doing the same thing. That simply means these guys are in it with a thinking that oil lower for longer. Remember my 2016 outlook when I was talking about oil, I mentioned lower for longer. Now I understand crude oil has actually bounced and now here it is trading at $40. And in fact, just yesterday in my video, I was making the case that after oil inventory data, it's probably going to go right up to here, up to volume over price resistance, which is around 42, 41.50, $42. I understand all of that. But lower for longer. Don't be surprised if it stalls there and it starts to roll back again, because that's what the managements are thinking in both Noble and Ensco. Otherwise, they wouldn't be deleveraging the balance sheet. If anything, they'll be leveraging the balance sheet. They will actually be expanding it at this particular time. So, something to keep in mind. The bottom line is this: in Noble, expect to get dividend completely eliminated or mostly eliminated in next 2 months. That's just my thinking around this. Another one I want to mention, and this one I did not catch today until I saw after hours. Something interesting over here. I rarely look at this stock. It's a tech company, of course. It's an old tech company. It used to be a good stock for many years ago. I used to actively trade it at one point. I haven't looked at it in a long time because it's just nothing exciting about this never going on. Stock is very cheap. It trades at 11 times forward earnings. Don't really see earnings growth per se. Every year the EPS is always 250, 255, back to 250, then 255. It's like it never really grows. Huge cash flow. The company generates a ton of cash flow, pays pretty good solid dividend of $1. On a $30 stock, $1 dividend, so it's got basically about 3.5% dividend yield. Has new management that was installed. The CEO was brand new. CEO basically came online, came in the management team a couple of months ago. That's trying to turn things around. Chart is powering higher. It's a long-term downtrend right here that it broke out. If I just draw the line here it is. Oops, never mind. Okay, here you go. There's another way. This is the weekly chart. See, you can draw a trend line, trend resistance right here. Finally found a bottom, rounded bottom, and now starting to power higher. I like the volume. See these big giant green bars? The volume behind these rallies is pretty interesting. So the stock, that tells me it's clearly under accumulation. Technicals look good. Fundamentals are very low. I'll be very honest, I do not know what the drivers of growth are in this particular company. I do have a note on this. I'll show you in just a minute, but this is what caught my attention today. In CA, see this volume? They rolled this entire about 4,600 contracts in total were basically rolled out from March 30 to April 30 strike right here. They went from here to here, and and they were basically rolled out for about $1.20. So they didn't really pay a lot for this. Now if you think about this, a $30.70 stock, these are 30-day out expiration, April expiration calls that are in the money, 30 strike calls, and they paid only $1.20 for these. I mean, these are in the money calls, only 50 cents and extrinsic value with a delta of 0.63. They're pretty attractive. I mean, it wouldn't take much, for these calls to go to $1.50 or $2. Only less than 2% move in the stock, and these calls may potentially double. So they're very attractive from the price and delta standpoint. So they're betting, they roll the calls to April's, and they're looking for continued move higher in this particular direction. Basically, you have this very strong trend going up, and they're thinking probably it goes all the way to 32 or even higher. So that's the thinking. Very low valuation. Technicals look great. Call options are active in this one. It's breaking out, and I was trying to dig some notes in this, and the one that I could find is right here. This is another one, comes from RBC Capital. Again, I couldn't make out anything that completely stood out for me in this particular report. All I could tell is that in one way or another, the company is making, right here, the analyst is making a case that the first quarter, they see that revenue growth should return to the model in fiscal year 17, perhaps as early as the first quarter by our estimates. Now, quite frankly, I don't know exactly what their channel checks or what they saw that they believe that the revenue growth will actually return in the as early as the first quarter. But there's always a reason behind it. But that's what the analyst believes. I don't have very hard data to go by how. They also see that the leading metrics have been portending this for several quarters now, and the new sales and total backlog tracking well. So again, something to keep it on the radar. Pretty bullish note out from RBC Capital. I don't usually cover this stock in very detail, but I like the technicals. Valuations are very low, and there's bullish call activity in this. I think it's an easy momentum stock. Just play the momentum and just ride it higher, and call options are not expensive on this. Last one that I'm going to discuss, and this is going to be pretty quick. You guys know how much I like Arista Network, because I truly believe this stock is very, very depressed for a long time. I just want to provide some color on this. Couple days ago, I mentioned that they were buying these puts right here in September 50 puts right here. They bought 1,600 contracts. We recorded that in the tracker as well. Very bearish flow at the time, which kind of freaked me out because I had no position. I still don't have position in this, but I was considering going long as it pulled back right here, but this is the entire chart since inception, since company went public. So you can see why $55 level is so important at this level. So 55 is very important for the stock, and a couple days ago they were buying the September 50 puts. Well, guess what happened? Today they changed their mind. We discussed this in the chat room today. Today they came and started selling, sell to open these puts on the bid, and twice the number of the puts that they were buying before. So I want to see how the open interest will change tomorrow. But basically they took completely 180 degree turn, U-turn essentially, and basically they went from buying puts to selling puts in the same week and the same strike. So that's weird. But anyways, very bullish flow in this one. If they're actually selling those puts, that means they really want to get long if it sells off any further from here. Now, interestingly, this also happened just in time when RBC Capital came out with a brand new note. Once again, a lot of the stuff that's discussed over here is pretty common, and it's all the same verbiage and all the same stuff that I've discussed many times before. I mean, to give you guys an example, here's my folder for activity tracker. Look at all these stocks that I've written about in the years and years, and I keep updating information about all these stocks. It's a simple thing. If I go here and if I type in Arista Network, I open this up. Here's all my notes. This is what you guys see. So I've written extensively about this. But so you can read it all about it. But here's one piece of information that's worth pointing out in the RBC Capital note that came out late yesterday. Right here, this table right here. It's just a quick glimpse to tell you or to show you how much this Cisco lawsuit has hurt Arista's valuation, enterprise value over sales. This is November 2014. This is when the Cisco sued the company. Arista used to trade at as high as 6 times enterprise value over sales, and it went down. It tried to recover after a very good earnings report back in the summer of 2015. Could not sustain because of non-stop. This lawsuit just would not go away, and then the multiples just kept contracting. Here you have now a stock trading at 3 times enterprise value its sales. All right, I mean, this is the lowest valuation or near the lowest valuation we have seen the company. And even if you compare it to peer group, if you compare it to Cisco itself, or if you compare it to other networking stocks such as Juniper Networks or some of the others, this is one of the lowest. And this is a growth stocks. Here's a quick history of what the actual and the revenue, actual EPS and revenue, actual versus estimated EPS and revenue guidance has been. Let's go to the EPS line. Look at these beats. 1, 2, 3, 4, 5, 6, 7. There are 7 quarters right here of history here. Look at these beats. The most recent was on February 18, 2016. The street estimate was 61. Here's 80 cents. They reported 30% delta. Delta. Huge beats on every time when this company reports. Same thing on the revenue side. Very nice beats are every time when the company reports on revenues. Every time very nice beats if company reports on EPS. I can go on and on. The growth has been fantastic. I showed a chart very recently in the chat room discussing how they have doubled the market share, stealing it constantly from Cisco, but it doesn't matter. This is what's driving the stock. And this is why you have Jefferies coming out with an underperform rating this week, and you had Goldman Sachs reiterating a sell rating on the stock last week. Because why? It's just this Cisco lawsuit. The darn thing will not go away. Take this away, and I guarantee you that, well, there are no guarantees of life, but I am pretty sure that you're going to see this stock just rip higher from here. It may not go back all the way to 6 times its enterprise value, but you're going to see the turns, the multiple turn, probably go back to at least mid part of this, which would be in line with peers around 4.5x. And that, my friends, right here, going from 3 to 4.5 means that alone is a 50% upside in the stock price, which means you're looking at a stock just only if this lawsuit goes away. You're looking at on the stock as much as 50% upside, in my opinion, just if that lawsuit goes away or settlement. And we're looking this to go from 55 to around 80, maybe 80, 85. But maybe wishful thinking on my part. I don't know when it's going to happen. I don't know when the lawsuit will go away. But that's what keeps hammering the stock. Eventually it will come to pass, and when it does, it's going to be one of the best buying opportunities you're going to see out there, especially in the tech space, because it's just too depressed right here. Extremely fantastic growth, 42% revenue growth last quarter, which, by the way, accelerated from the prior quarter of 38%, and margins expanded as well. It was a beautiful quarter that was released right here. Right here, stock was gapped higher and was moving higher, but it doesn't matter. You know, Goldman comes out, Jefferies comes out, and it just goes straight right back down. So what can I say? Those are the things on my radar today. Sorry for a very long video. It's 41 minutes. I actually have a couple more things, but I'll cover those next time in my next video. For now, this is good. Keep an eye on Nike. Just to quickly tell you, keep an eye on Nike. I think you're going to see Nike break out next week and power higher. Keep an eye on MedTech space. Intuitive Surgical and Medtronics is our favorite. They have that conference going on, and all these companies are presenting tomorrow, actually tomorrow, Thursday, as well as on Friday. And what else did we discuss? SRPT. Quickly, once again, massive insider buying right here taking place today after hours, and obviously this is completely 33% short interest here, by the way, in the stock. 33% short interest, and everybody has turned bearish after this incident right here, but management doesn't care. They're buying the stock, so who knows what the hell they know that we don't. So those are the things on my radar, and we'll talk again. Thank you. Good night.